Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Dalal Street looks set for yet another day of a cautious start. SGX Nifty indicates a mildly negative start for the broader index. At that point of time, the loss was around 32 points, but it remains to be seen whether it's weighed down on the performance overall for the markets. US market ended the overnight session flat. Janet Yellen to lay out US economic priorities on China in today's Thursday's speech, beg your pardon. Asian shares trade mostly lower amidst muted global cues. FIIs, they have sold shares worth around 810 crore. DIIs, on the other hand, have bought in shares worth around 400 odd crore. Windfall tax on local crude has been revised to 6,400 and diesel sees a cut in export duty. BEML Land assets to list today. Notional value was around 362 per share on the day after demerger. Antique expects the price to be around 624. ICICI Securities, Mastek, Tata Communication are among some of the companies which will be reporting their earnings today. But let us get going and discuss some stock and strategies with Rajesh Palviya, Vice President, Head Technical and Derivatives at Axis Securities. Good morning there. Rajesh, two sessions of breather coming in for the bulls. Do you think we're now looking at, again, bulls coming back in a strong way, or you think this just marks the beginning of a bear run, given that IT sector has not kick-started the Q4 earnings season on a very buoyant note?
Good morning, Nickey. So overall, if we analyze the setup is indicating that we may continue further more bullishness from the here onwards. Both the indices are holding up their short-term, medium-term moving averages. Looking at the data setup, yes, some bit of consolidation we can expect for some couple of trading sessions for Nifty, especially as we see the data setup. Call writing was happening at 17,700, 17,800 strike. So for some time we can see 17,800 could act as a immediate resistance or supply zone for the Nifty. But once we able to cross these level on a closing basis, then possibly Nifty can scale up further higher, and possibly Nifty can inch up towards 18,000 mark also. So until we are not breaking below 17,550, 17,500 level, buy on dip should be the strategy. Yes, IT stocks and IT index is a dragger for the benchmark indices, but the only sector which is under pressure, but the rest of the other sectors are showing strength. So we are initiating here, buy on dips kind of strategy for positional setup. But those who wants to initiate some trade for, this weekly expiry, so short strangle is the strategy where we are focusing at this moment, because we are anticipating that, Nifty is likely to remain in the range. So we are selling the 17,550 put option, which was closed at around 16 rupees in the previous session. And out of the money call of 17,800, we are selling at 14 rupees. So we are pocketing around 30 rupees premium by writing this call and put. So as we are expecting that, market is going to remain in the range for at least for next two trading sessions. So this strategy can give you good profit ahead of this weekly expiry.
Sure. And what's the strategy right now on Bank Nifty per se? Because that also has, relatively shown some amount of strength as compared to Nifty. But how is the trend stacking up after the correction that we've seen from the start of this week? Do you see more amount of resilience coming in from Bank Nifty?
So some pause was there since last two trading session in the this Bank Nifty rally, but Bank Nifty is one notch better than Nifty, and even in the previous session we seen some bit of short covering action also. As Bank Nifty is holding above 42,000 level, so our view is bullish for the Bank Nifty for near term setup also. Once Bank Nifty manages to cross above 42,500, then possibly next target for Bank Nifty could be around 42,800 to even 43,000 also. So Bank Nifty is looking attractive compared to Nifty at this moment, and we believe that this Bank Nifty can exhibit furthermore bullishness from the current level also. So here one can initiate buy. Our stop loss for going long for Bank Nifty at 41,900.
All right, 41,900 going long is the call coming in on the Bank Nifty. But Rajesh, three profitable ideas that are, the market participants, or for that matter, the viewers can now look at. Do you think Lupin will feature into that list?
Yeah, some buying action was there in pharma space, and the sector is showing some bit of strong recovery from their recent low. Lupin can be one stock where one can look at to go long, because most of the pharma stocks are showing good strength. So Lupin has given a breakout of its consolidation range. So looking at the setup, yes, stock can continue further more upside towards 730, 740. Here stop loss can be around 685.
Sure. Apart from Lupin, any two other ideas, Rajesh, that we can be looking at?
So other idea is PI industry is looking attractive. Stock managed to give breakout of its consolidation range of 7-8 days, and stock is comfortably holding above 50-day moving average. Looking at the long built up, we believe that PI industry can be a stock where we can expect a target of 32.20, 32.40 on the higher side. One can buy with stop loss of 31.20. Another stock, that is Bata India. After a strong corrective move, now stock is consolidating on a weekly chart. Almost stock managed to give breakout of almost 7-8 days consolidation range. And looking at the base building activity on the weekly chart and short covering action on the derivative front, we believe that Bata India can scale up further higher. And 1480, 1490 could be the near-term target for Bata India. One can buy this stock with stop loss of 1400.
All right, so that's the call coming in. Bata as well as PI Industries along with Lupin is what we have discussed this morning. But let's quit going and address the top movers of the day while Rajesh just stays on with us and address the market opening, and we'll get back to him and chat about other queries that we have. Some of the stocks that we'd like to address will include the likes of United Spirit, ICICI Lombard, Coal India. These are some of the companies that we'll be talking about. First, let's talk about ICICI Lombard, because the Q4 numbers have been out. It's a mixed bag. UBS has maintained the buy rating and the target price of around 1,445 rupees. Overall mixed earnings. Net income, there is a beat out there. Claims have been elevated. Premium growth is slower than industry. Combined ratio also remains elevated. The management has maintained combined ratio guidance of 102% by FY25 estimate. Macquarie on USL. That's one thing that I'd also want to address, because yesterday there was this development that the New Delhi has refused to renew Pernod Ricard's license. That's the competitor out there, and no amount of renewal there augurs well. The company might benefit. The stock was up even in yesterday's session, but they see some risk to near-term margins due to inflationary headwinds. But we are going to be talking about Coal India in just a bit. These were the two stocks that I'd like to highlight. Let's get on to the markets opening there, because we're expecting a cautious start coming in for the markets also. Nifty 50, 17,650 odd level. It's a bit of flat with negative bias out there. So yes, the caution has crept in. More amount of losses coming in for Nifty. Third consecutive session of loss coming in. Right now, the losses seem to be slender. Remains to be seen if bulls make a comeback. Let's talk about Bank Nifty Index, because that's where, you've seen some amount of resilience until now. Bank Nifty Index too is trading flat in absence of any positive trigger with some amount of negative bias. 42,000 mark has been held on to, so that's a positive coming in at least for Bank Nifty, because the bears will get more activated once Bank Nifty Index manages to, or gives into selling pressure. Let's talk about the other sectoral indices out there. Something in the like of Nifty IT, which has seen sharp dropping in the last two sessions, right? 0.5% gone even on that one. We're looking at losses coming in for IT. Auto has managed to hold up. 0.1% of gains coming in for the auto basket overall. And if we talk about the other sectoral indices, that's the pharma basket. We're seeing flat with negative bias. That's the momentum building in for pharma. FMCG, that's the basket that we're looking at. Finally giving away to the selling pressure. So defensives overall aren't really, trading in green at this point of time. Metal index holding up. China's production data, the GDP is coming better than expected. That augurs well for metal stock overall because it's the major commodity producers out there. Realty, strong gains coming in, strong demand, pre-sales numbers have been higher. Nifty Realty is also holding up the neck way above. And also energy at this point of time, a bit of flat bias, flattish trend out there with negative bias out there. So right now we are looking at somewhat listless or flattish start coming in for the markets. Let's also talk about the advances and declines before we graduate to addressing the Nifty top gainers and top losers out there. Advances 20, declines 29. Market breadth right now seems to be in the favor of declines. Tata Steel, Adani Enterprises and Eicher Motors. These are some of the top gainers that we have on our list this morning. In other gainers that we have include the likes of L&T, M&M and Axis Bank. These are some of the top gainers that we have. In terms of the top losers, if we could pull that up, Infosys, ONGC and HCL Tech. So IT stocks again are sitting at the bottom end of the Nifty index overall. Sun Pharma, Asian Paints, HUL. These are some of the losers that we have on our list right now, inclusive of Wipro, Cipla. So it is combination of IT and Pharma. Basically the defensives out there which have made it to the losers list, and it's the rate sensitives which are holding up. Clearly the trend which has been playing out since the start of the earnings season. Rate sensitives are taking the center stage and defensive are on the back foot. So that's clearly one comparison that we can draw up here. But I'm going to go across Rajesh and ask him about what he makes out of something like a Tata Steel. Metal stocks have been doing well. There is, the incremental data which is coming out from China suggests of the bullish trend overall for the commodity sector. But Tata Steel on charts, how does that look?
Yeah, after opening, yes, some buying action is there in metal space, especially, yes, Tata Steel has given a breakout of its last 3 days consolidation range. So if stocks continues to hold above 105, then possibly the next target for Tata Steel could be around 112, 113. But from this sector, I believe that Jindal Steel is also positioned very well. And looking at the setup, one can look at Jindal Steel also. Stock managed to give breakout. And looking at the overall setup, we believe that Jindal Steel can scale up further higher from current level towards 585, 590. One can buy this stock also with stop loss of 562.
All right, so JSPL along with Tata Steel, these were the two stocks that we discussed. But Mastec is also going to be reporting in the numbers. Rajesh, what do you make out of it? Do you think Midcap IT space looks set for drubbing just in ways of big IT companies like Infosys and Tech Mahindra and TCS, or you think it could be a little bit different this time around for mid-cap before they start acting more vulnerable due to vendor consolidation and macro challenges overall?
So I think it's very difficult to take a trade on the mid-cap IT space also because, large-cap IT stocks are going in the downward direction and some buying action is happening in the mid-cap IT ahead of earnings. But looking at the overall scenario for most of the mid-cap IT, almost all stocks are trading near to their immediate resistance area. So my advice would be to avoid at this current juncture because still supply pressures are not settling down. And we believe that, once we are further rolling out this earnings for rest of the IT stocks, some more pressure we are going to witness in IT space. So at this moment, our advice would be to avoid the mid-cap IT space also.
All right, so avoid mid-cap IT space too. That's the word coming in overall on the IT basket. It's taken a sharp hit out there. But Rajesh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, I'd like to address a note coming in on Coal India before we move on to Avinnash Gorakssakar, who is the Director Research Profitmart. JP Morgan on Coal India. It has an overweight rating and the target price of around 290 per share. That's good upside if you look at for a PSU company like Coal India. It expects FSA coal price hike to come through and offset the wage hike. Last price hike was in Jan 18, so it is due for a price hike, especially as wage bill has been finalized. Stable to higher earnings should translate into strong dividends. That's the word coming in overall for Coal India. Do keep an eye out on this one. Right now it's trading a little bit lackluster, but I wouldn't be surprised if you see some momentum building in on that one. But let's cut across our conversation now to Avinnash Gorakssakar, who's the Director Research, Profitmart. Good morning, Avinnash.
Yeah, good morning, Nick.
All right, since an earning heavy week out there, RIL will be reporting the numbers, ICICI will be reporting in the numbers. Do you expect the trend to reverse? And if yes, what sort of earnings are you expecting from the two key heavyweights?
Nicky, as far as ICICI Bank is concerned, we expect a strong quarter. Our sense is that you could see a 17 to 18% loan book growth. The net interest margins, our senses, could actually expand by about 10 basis points. And overall, I think the commentary is also going to be pretty strong with a credit growth of almost 14-15% in the system. Our sense is that ICICI Bank will be able to expand its balance sheet by at least 18 to 20%. And the best part is that apart from the core banking business, the other subsidiaries, especially, the general insurance, as far as the security broking business, which is expected to report earnings today. Plus, all their subsidiaries are expected to report pretty steady numbers. So I think on an overall basis, I think ICICI Bank would definitely mirror the same kind of performance which, last week HDFC Bank reported. The commentary also has to be, is expected to be good. I think what kind of credit cost and what kind of growth outlook the management shares post the numbers is going to be pretty important. As far as Reliance is concerned, Nicky, I think we could expect a flattish performance on the net profit level. GRMs could be a slightly weak looking at the kind of increase in the windfall tax which could get adjusted in the GRMs. But I think the telecom business as well as the retail business could be, obviously do steady kind of growth numbers. And my sense is that the market would be now looking at the near-term trigger, that is the demerger of the Geo Financial Services business, which is expected to be a very big event. The management has already cleared the demerger, and I think markets would obviously like to hear some commentary on this business from the management. So I think net Reliance is expected to post a steady number. Profitability may not be great. It could be at best be flattish for Q4. But I think the commentary coming in from the management would be very important to watch out since it's a year-end result and markets would be obviously looking at growth numbers for FY24 going forward.
All right, Avinnash, so you're expecting steady set of numbers, and commentary is something that we all need to watch out for the index heavyweight. But let's also talk about the pharma basket, Avinnash, overall. The stock was the biggest gainer. I'm talking about Lupin now. The Lupin was the biggest gainer in the pharma pack on Monday, surging almost around 6% on massive trading volumes. I think this came as a bit of a surprise considering that the company is still grappling with issues at Pithampur plant. What do you make out of it? And within the pharma basket, do you like any other, company as such, given the valuation?
See, I think talking about Lupin first, Nicky, I would agree with you that I would at least wait for another quarter and wait for the Q4 numbers to come out and obviously look at the management commentary, because the company has been facing significant headwinds, in its key markets like US. I think still the headwinds continue to be challenging. So I think Lupin, I would believe, I would not, buy at the current odd levels considering the kind of earnings trajectory which they have shown. But as far as pharma companies are concerned, we are very positive on Sun Pharma. Our sense is that the specialty segment would grow significantly in double digits. And I think you could see a stronger earnings growth coming in not only in the Q4, but even for the coming financial year. Overall, the pharma pack is attracting a lot of interest because, in a volatile market like this, most investors are trying to be defensive. They're trying to hide behind safety. And I think pharma has corrected also significantly. So that offers a significant risk reward, provided, the view is long term. So I think Sun Pharma looks pretty interesting. I would avoid Lupin as of now.
All right, so Sun Pharma looks attractive, would like to avoid Lupin at this point of time. But apart from that, let's also chat about the IT companies. We've seen major drubbing coming in after the commentary which spoke about the demand uncertainty, probably some cancellations coming through, lack of less in headcount. At this point of time, do you think most of the negatives have already been priced into the stock prices of IT companies, and you could probably, they make for an attractive buy given the valuation? How do you look at the space right now?
No, I think, Nicky, one thing is very clear that IT companies which operate in the BFSI space are going to find significant headwinds, at least, at least in the next 2 to 3 quarters. And I think one key point which I would like to mention about Infosys is, when they gave their third quarter results, the management actually increased their guidance, which actually, showed the markets that quarter four could be much stronger. But what actually came out was a complete U-turn. So I think the markets were terribly disappointed by Infosys numbers. And I think the kind of outlook and the kind of single digit growth which the company has projected going forward clearly depicts that, there's a lot of pain expected, from the BFSI space. So I think we should look at companies, which have got a lesser dependence on BFSI, specifically, if you were talking about some companies, Tech Mahindra seems to be an interesting bet. They have a lesser exposure on BFSI, a larger exposure on the telecom vertical. So I think, investors should now look at such kind of IT companies which have got to focus more on non-BFSI business, which should actually help them, tread the markets more carefully. But otherwise, companies which are largely into the BFSI space should be avoided. So we have a cautious stance on the BFSI-based companies. I mean, non-BFSI business definitely would be a kind of a bonus at this point of time.
All right, so that's the word of caution coming in overall on the BFSI space. We've also discussed enough and more when it comes to the pharma space per se, IT space. Avinash, at this point of time, with the earnings season in the full swing, do you think there is a sector that can probably be a good place to hide in, given the sort of valuation, is also expected to see strong set of numbers coming out in this quarter?
So I think, Nicky, clearly, pharma is one place, but the other place could be FMCG. I think FMCG, hopefully if the monsoon is good and rural demand picks up, then I think you could see a very strong rebound in most of the FMCG kind of stocks. We are positive on companies like Dabur, Godrej Consumer Products, Hindustan Unilever. Our sense is that rural demand has remained soft for a long time, and once a normal monsoon happens, you're going to see rural demand taking off quite significantly. Most of the branded B2C businesses are available at reasonable valuations. So I think if somebody were to take a contra bet, FMCG and pharma, these are two pockets where I think you could possibly look at them as defensive pockets and where a reasonable amount of risk reward is possible. If the markets turn volatile, these spaces could get more active.
Right, these spaces could really get more active. But Avinash, apart from the IT space, banking space, and also we've chatted about FMCG, I'd want to talk about overall the recovery that we've seen in the auto space. For the last couple of days, we've seen auto sector doing pretty well on the charts and the stock prices. There is a smart numbers also that have been seen, they've been witnessed. What do you make out of it? And then we'll come on to the bigger portion of discussing about other rate sensitives for that matter.
No, I think auto sector seems to be well positioned, Nicky. I think if you look at specific segments like the commercial vehicle segment and the passenger car segment and the two-wheeler segment, I think fortunately all three of them have been doing very well. The two-wheeler pack has done very well. Stocks like Bajaj Auto, Hero MotoCorp have shown us very strong bounce in the last couple of weeks, clearly indicating that there has been a kind of rebound in the two-wheeler market also. As far as the passenger car market goes, I would believe that we could see a much better year compared to last year, considering the fact that commodity prices have started falling. So input prices falling could obviously boost margins of key players here. And commercial vehicle makers are yet running on a very strong kind of wicket. In fact, most of the companies are not able to supply the products on time because demand is much ahead of supply. So I think commercial vehicles is one space which is going to be in a sweet spot at least for the next 12 to 15 months. So I think, all this is going to get reflected into better volume growth. I would believe that most of the auto companies like Mahindra, Maruti, they're sitting on a large order book which gives them a decent kind of revenue visibility at least for the next 12 to 18 months. So I think markets are factoring in these kind of, developments which actually shows the buoyancy in this sector.
Avinash, also, let's chat about the real estate sector overall. Strong momentum when it comes to the pre-sales demand. And if we talk about the valuations also, the entire space has seen some amount of correction from the start of the year, right? How are you reading into it? And if you are bullish on the realty space, which are the companies that you like in the pecking order?
No, I think clearly real estate has seen some sort of correction because markets were apprehensive that a continuous rise in interest rates could actually flatten demand, but that has not happened. We've been talking to many real estate companies, and I think the kind of signals which we have been getting is that demand continues to be strong. Inventories are, selling as normal. And I would not be surprised that in the coming year, that is FY24, one could see a stronger growth in inventory sales. Already we have seen companies like Soba Developers, Purvankara in Bangalore, typically large builders like DLF. I think both from the middle as well as from the luxury segment, inventory sales are definitely going up. My sense is that, investors should take a stock specific view. We are positive on Soba Developers. We are positive on DLF because we believe that, in terms of the geographical reach and the kind of bouquet which it offers to its clients, I think it has a mix of affordable as well as luxury projects. So I think DLF and Soba could be better bets. Overall, I think the sector looks positive, but I think on other companies, we will have to take a fresh review based on the Q4 numbers when they come out.
How about something like a Sunteck Realty for that matter? Do you see some amount of traction even building in on that one?
Yeah, I think Sunteck is largely a Mumbai-based, real estate company. Their Vasai project has also taken off pretty well, and I think they strategically entered the affordable segment about a couple of years back. So I think Sunteck definitely looks attractive at the current price. My sense is that hopefully, if the execution, of their new projects is very, very solid, then I think that could get reflected into numbers. So Sunteck definitely also qualifies as a good mid-cap real estate stock.
All right, so Sunteck, Soba, and I guess Purvankara. These were the three names you suggested, right, Avinash?
Yeah.
All right, so these are the three names that has come through out of a discussion when we spoke about real estate sector. We're seeing some amount of huge demand coming in. Inventory sales are expected to perk up higher. The commentary also suggests so. But then, Avinash, we're going to leave it at that. And thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.